Let's get going. Thanks everyone for joining us today. We have an update with iFabric. iFabric reported excellent Q1 results last week. In fact, it was a record quarter. So looking forward to hearing about those results. With me, I have Hilton Price, CFO, Giancarlo Beevis, COO, and Hylton Karon, CEO, and my colleague Lily Law, who's going to help with some of the questions. As always, there will be a Q&A section at the end of the webinar, so feel free to either email or input your questions in the Q&A box at the bottom. I don't believe we're going to work off a presentation, but this session will contain forward-looking statements. If you'd like to know more about those, you can find them on the presentation on the company's website. With that out of the way, I'd like to turn the mic over to Hylton Karon, CEO, who's going to talk a little bit about the quarter.
Thanks, Deborah, and thank everyone for joining in. As Deborah stated, we had a record quarter in Q1. For those that aren't aware, we are now referring to this quarter, Jan 1 to March 31st, as Q1. This is the start of the new financial year for the company from Jan 1 to December 31st going forward. So please just keep that in mind when comparing quarter, year over year. To ensure that we are in fact comparing the same time frame. With that said, I think that a couple of highlights that are worth pointing out is we had a record quarter despite the fact that actually December saw the biggest shipment of what is traditionally a January-February shipment of swimwear. So not only did what was traditionally shipped in Q1 shipped in Q4 of last year, it happened to be Q5 for those financial period, we still had a record quarter, which just talks to the growth of the company. So I think that one really has to appreciate the amount of growth that is going on and that we're certainly proud of the achievement of the group is that we're continuing to grow this business, and the 4 quarters are actually now the peaks and valleys of this business are not as large as they used to be. Spring summer was traditionally our slowest time of year. By adding swimwear and different fashions to our offerings, we certainly are keeping the warehouse and the operations busier on a year-round basis than peaks and valleys, which is a great thing for the organization in the bigger sense. I think we're on track with the financials that we brought out to hit our forecast of 2024 as we go, to get into the 30 million from the 23.5 that we did for calendar year last year, which is certainly impressive growth year over year. Really, we're just continuing to see growth and interest as this business grows, and we look forward to reporting similar performance in the quarters to come. I am going to now just hand over to our CFO to just review quickly the hard numbers for Q1. And then if there's any other questions, we're all here for the duration of the webinar if there's any other questions after Hilton's presentation.
Thanks, Hilton. Good afternoon, everyone. I think Hilton's covered a large portion of what I was going to cover. I'll just highlight a few things that he may have missed. Revenues came in at 6.8 million compared to 6.6 in the previous comparable period. And as he alluded to, this was as a result of new programs, new customers, and that bodes very well going forward because, as he mentioned, swimwear is shipped earlier this year. So when we repeat those swimwear programs in Q4, we'll be driven to what I believe will be record revenues for 2024. What is also highly important is our margins. We improved these significantly in the quarter. They were up to 44% from 40%, which is some of the best margins historically that we've seen. And this is as a result of the new programs carrying some of the best margins we've seen in a long time. Again, this bodes very well. Hopefully, it'll continue going forward. and we'll see a spike in earnings as a result. Apart from record revenues, we saw record EBITDA, 855K in the current quarter compared to 655 last year, and again, driven by higher revenues, higher margins. Working capital, we actually increased our working capital by around 900K in the quarter, mainly as a result of those earnings. Another good thing. Our balance sheet continues to strengthen every quarter, which is excellent. Cash increased by 1.6 million to 3.5 million. We had a good quarter in terms of receivables collections, and we also managed to reduce our inventories a bit. So we're trying to get some efficiencies going in the business. In the previous year, we had problems in getting goods from China because of the shipping problems encountered during that period. Those have significantly improved, and we're able now to more efficiently control inventory and bring it in on a far more shortened timeline, which will give us more cash in the business, one would think. Operating debt, we've got no operating debt at the moment. Our credit line is, we have a credit line of around 7 million. We aren't using that. If we do use it, I would think it would be for the purpose of financing new business. So that would be very positive. So again, a very strong debt-free balance sheet. And I think that in a thumbnail summarizes the quarter, or at least the main elements of the quarter. I'll be happy to take any questions if you have any.
I think there was one question that came in. Just give me 1 second. If you're successful in the US with such large retails and sales rise quickly to 100 million, do you have the infrastructure in place to deliver? That might be more of a Giancarlo question.
Yeah, sure. I can take that. We absolutely do. So currently our infrastructure in the US consists of a third-party warehouse in Houston, Texas, which we utilize not a significant portion of their overall warehousing size. So we could rapidly expand that if we needed to. From a capacity standpoint overseas, we have tons of capacity room for all these different types of programs, from the chemical sales to the finished product manufacturing. And we've also strengthened our supply chain by moving out of China, not solely depending on China. We're now doing a lot of business out of Taiwan, Vietnam, moving into Bangladesh. So we do have a whole handful of new options that we can expand our supply chain into if we so need to.
And then what revenue stream do you expect to increase the fastest currently?
I think from the finished product apparel standpoint, we have some major new programs launching in some big retailers in the United States. So I would expect that obviously to rise as those big retailer programs come to fruition. And as we deliver on these programs, we're gaining the confidence of these retailers, and they're coming back to us with different opportunities rather than us having to go to them to get them. So that will continue to be very strong. So finished product apparel, the swimwear keeps growing at a rapid pace. And then quite honestly, with the launch of our two new textile technologies, we're getting a lot of interest in those two technologies as well. So I would expect those ones to be a close second as far as ramping up new revenues.
Okay, and then I've got one for Hilton. What EBITDA margin would you expect with sales of 50 to 100 million?
44% in the current quarter is at the top end of our range. Unfortunately, the bigger programs, being volume programs, carry less risk, but they also carry less margin. So I do think our margin will decrease. I think our range and our anticipated range is always in the range of 35 to 45. So it'll be somewhere in between, one would hope. The beauty of taking on the new business is that our overheads don't incrementally increase as a result of the new business. So even at the lower margins, we should see a significantly bigger proportion dropping to the bottom line and increasing earnings.
And then just to touch on a few things that we spoke about in our previous update, some more operational questions. I know last month we were talking about the hospital clinical trial, which has been completed, submit to the medical journal, and it's currently under peer review in order to receive that white paper. So just wondering if you guys have an update on that timeline, if you could walk us through that briefly.
Sure. I mean, all the data is submitted into the journal, so now we're essentially on their timeline. I still think we're on track for somewhere towards the end of July to have it fully published. But to be honest, there's not much more of an update from that month to month. We're kind of in the hands of the journal, but we have not had the bright side of that is that we have not had any comeback questions or anything else the journal can come up with as far as the way we've designed the study, the way we've reported the results. So at this stage in the game, we don't see any issues, and we would fully anticipate it to be published at the end of July. So give or take somewhere around there. Okay,
great. Thank you. And then could you just briefly walk us through what that white paper milestone will look like for iFabric?
Yeah, I mean, it's quite massive for our direct-to-hospital sales and with our scrub customer, because it empirically shows that the utilization of our textile technologies can affect infection rates within a healthcare facility. So the hospital that did the clinical trial and the hospital group that owns them is working with us on trying to integrate all of those different scrubs utilizing Protex 2 into their various hospitals within the group. So that we should get some more information on that coming in the summer. And then once that publication is listed, we anticipate other hospital systems coming towards us. So it's one thing to have great clinical trials. It's another thing to have the actual hospital system that did the trial adopt the actual medical instrument that was trialed. So that's another positive for us.
Okay, amazing. And then just shifting gears more towards the EPA. So could you provide us a quick update on the leaching study? And just for listeners who aren't particularly aware about that, it's the final step in the EPA process for apparel.
Yeah, the leaching study continues to be underway. It's not completed as of this stage, but we don't have any issues at this point in time. We're just waiting for the results to come in so we can finally submit the final paper to the EPA.
Okay, great. Thank you. Those are my questions in terms of the operational timelines. But it looks like we have another question here from the audience. I sense that the company continues well with high revenues, profits, etc. When will dividends start, and is a cash flow statement available?
I would say as soon as possible. We'd also like to see some money in our pockets. Obviously, the needs of the company come first in terms of growing the company and applying any working capital to that purpose. But the minute we have spare cash, it's in our mind to start declaring dividends, hopefully within the next 2 years.
Okay, great. Looks like that's it from the other audience questions.
I don't have any additional questions. Is there anything that you gentlemen wanted to discuss today that we didn't get to?
No, I just think that, I think that as we stated, we've really made it's been work in the past that's now the real delivery start in 24. I think we're having our biggest exposure into the US, while our core Canadian business remains as strong as ever and in fact is growing very nicely. So I think that the thing that the investor community has to know is we're actually just spreading our risk and spreading with new programs, with new customers, and especially in the US. I think that these are exciting days. We've put a lot to get to where we're going, and I think 24 and beyond should see substantial growth for many years to come without actually us going out into the market and actually having to buy increased turnover. The potential of generic growth in this company at 20-30% a year is very likely for many, many years to come. So I think we've just really hit stride and continue. I think the investor community should also understand when we get orders from our customer base, these are 6 to 8 months out. So when we bring out forecasts and where we understand, we know that 6 to 8 months from now, we will be delivering these orders. So when we talk about Q2, 3, and 4, and Q1 of next year, most of those orders are already in place and starting production. So we really are talking from a position of clarity in terms of our forward looking numbers in terms of what the business is going to do into the future. It helps us with cash flow. It helps us with organizational logistic control, manufacturing. All these things are really well planned in advance, and I think we're talking from a real position of very low risk in terms of what we're putting out into the market of what we should be doing to complete 24 and into 25 and beyond.
Got one audience question for you, Hylton. Would you ever consider taking the company private?
question that's often asked of us. That's not why we went public. So, one never takes anything off the table, but it's not the motivation. It's not really why we went public. And we're really not, it's not in our dialogue. It's not in our thinking right now. We're looking at phenomenal results, and one can never say never, but it's certainly not something that we're even close to considering or thinking about at this stage in the game.
And then another audience question. What's your financial projection assumptions to extend the warrants maturity by one more year?
I think we just extended it this year, and I can't speak for next year. We just put it through. I think we've got phenomenal performance, and we'll cross that bridge next year when we come to it. I'm not going to make any statement. This is a board decision, and we'll deal with it 11 months from now. But we were more than understanding of these people's position, and hopefully this year hit such a record stride that we don't have to have this conversation next year. But that would be really a feather in everyone's cap. Anyway, we're working hard, and we'll worry about that in the future. It's not something that we can really address right now.
Yeah, I'll add to that. I think with the expectation for EPA is so close, hopefully within this current year, but I mean, timelines is something that we don't get hung up on. We feel that we can hit the price target for the warrants. So although our price is low at the moment, I think as soon as we get what everybody's expectation is, a unique claim at the EPA, I think we should see a significant bump in our share price. And hopefully we could get to the price at which the warrants would be exercised.
Nice. Well, it sounds like you've had a really good start to the year with a couple of key milestones and a record quarter, and set the table nicely for the rest of the year. I don't have any other questions. Lily, do you have any other questions?
I think that pretty much covered it for the quarter.
Perfect. Well, thank you for taking the time to update the market. I know that's been a key objective of yours this year, is to make sure you keep the investors more informed. So thanks for your time, and thanks to everyone that participated. If you have any additional questions or you'd like a one-on-one meeting, please feel free to follow up with me or Lily or the company directly, and we'd be happy to set that up for you. And yeah, everyone have a great afternoon.
Thanks very much.
Thanks, guys.